Welcome, everyone. Thank you so much for joining this session. I'm extremely excited because I know how impactful those sessions can be. We have had one together with Brett a year ago in February, I believe, and got a lot of really good responses and feedback and delivered a lot of good value to everyone who attended and even people who have been watching the recording after. So thank you for being here. And I think this Brett doesn't really need much introduction because if you are here, you probably know Brett already, but still, just to say it, Brett has spent decades working with professional traders, including traders in hedge funds, in proprietary trading groups, and investment bank settings, helping them optimize their performance at a very high level. So he's also an active trader and longtime author and someone who has been shaping the conversation in the trading psychology for many, many years. So Brett, I'm absolutely thrilled and thank you for being here. Great to have you here. Thank you for joining us. Before we open up the floor to questions, I would love to start with your perspective on the current market environment. What are you seeing and how is it impacting traders from a psychological standpoint? And then we'll bring it into the room.
Good. Thank you, Agnieszka, and welcome to everyone. I'll talk just a little bit about markets and what I'm hearing from the people I work with, and then we can jump right into questions. Okay, so what is happening at the long end of the yield curve? People can put in chat what's happening to rates at the long end of the fixed income curve. Are interest rates going up, 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 or down, down, down? Rates are the same, going up a little bit. What? Yeah, no, there's no cut. Yeah, so the cuts affect more the short-term rates. If you look at the longer-term rates, what's like the 30-year rates looking like? We just recently started, creeping up, and we're now pushing 5%. Now, the long end of the yield curve reflects inflationary expectations. The short end of the curve reflects anticipations about central bank policy, like rate cuts. So what's happening is that the yield curve is steepening. In other words, the short rates are quite a bit lower than long rates. The long rates are getting higher, 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 anticipating inflation. Now, why would the long-term rates be anticipating inflation? What's going on? Why would we have inflation? Everything, yeah. Why would we have inflation? Energy, yes. Oil, yes. What what happened today? And energy out of control, government spending. There you go. Well, and the spending and the government debt is very relevant to the bigger picture of this. So that's actually a very good point that was made. But yes, the immediate issue has been rising oil prices. And just today, we saw oil prices creep up, 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 up. Now, that sets up a dilemma for the current market. And this is what people who I work with are talking about. On one hand, there is a lot of promise that people see in artificial intelligence. I'm sure you haven't heard about that. But if we look at some of the stocks and sectors that are connected to AI, some of the semiconductor names, for example, those have been strong, 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 strong. We've been going to record highs. And yet, if you look at breadth in the stock market, the number of stocks making new highs is not all that great because a lot of the strength is concentrated in this AI related theme. So there's one line of thinking that we are in the early stages of sort of a latter day industrial revolution, that AI is going to be the biggest thing ever. And markets are going to go up for quite a while. And we saw the breadth thrust off the late March lows, reflecting what some people see as a new bull market. And that is expected to continue for quite a while. So some of the people who I speak with and some of the people I respect are very, very bullish in the stock market because of this AI theme. If you follow, does anyone follow Jim Roppel, Roppel? Yeah, so Will said yes. Yeah, I definitely recommend his work. A very smart person. He manages a fund, but he writes unlike most people who manage funds, he writes a newsletter, and the newsletter is available to people. In fact, I think he's offering 2 weeks free. I'm pretty sure. But the Roppel report. Yeah, thank you, Jim. Yeah, so I can vouch for his work. He is extremely bullish and sees this AI theme as really major, but he also is careful about how he trades it and is good at managing risk. So yes, Jim Roppel. Yes, he is bullish, but he is particularly bullish right now, Will. Anyway, so that's one theme, one direction in the market. The other one is about this inflation, that oil prices are going up, 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 up. And because there are problems with supplies, because there are problems with transportation of oil, given what's happening in the Straits, the result is this shortage in the oil market is likely to last quite a while, even if the US and Iran and other parties were to sign agreements. And so we could see high oil prices for quite a while. Now, if things don't get better in the Middle East, we could see higher and higher oil prices. And so a whole other line of thinking is that we are in the relative early stages of an inflationary period like the 1970s. And ultimately, the inflation will be a drag on the stock market, and we'll see what is called stagflation, stagnant economies, high inflation, and really hurting economic growth. So that's a very bearish scenario. Anyone who knows about the markets of the 1970s, I'm old enough to remember them. From 1968 all the way, well, actually, it's even from 66, all the way to the bottom in 1974, the market lost over half its value, particularly in inflation-adjusted terms. So it was a very serious bear market. So it's an unusual time right now because we have some people just uber bullish, and we have some people who are really concerned about a bearish outcome from inflation and oil. So that's what we're dealing with. And it's one reason why people have been hesitant to put lots of money to work, because there's such uncertainty about the situation. So we had the markets really come down late in March, and then almost a V bottom. They come up, and people are frustrated. There's the word, Agnieszka. People are frustrated that they've missed some of the rally and that they don't know what to do next, because there are the fears of inflation and there are the issues of growth. So that's where people stand, lots of frustration. And so they end up talking to a psychologist like me.
Yeah, because when you are when you are in that situation, you miss that move, right? And it's a very strong move what we have seen. It, you know, we are taught not to get in, not to chase, but to wait for the pullback. But when you look at those moves, it's like, where is the pullback? When is the pullback gonna come? And that's where the fear steps in. Like, am I gonna get in at the highs, or what should I do? And I think
Yes.
that's where a lot of people get the frustration because, that's like trading from fear, basically.
Right, right. And you're absolutely right about the waiting for the pullback. Okay, the market jumped up and I'll wait for it to pull back and I'll get in at a good price. And it's just gone up, 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 up. And, in the last few days, we've sort of been back, forth, but really no major price pullback. Um, I'll just mention what I wrote in the blog. I have 4 cats at home, and they may start attacking the screen. Anyway, I mentioned on the blog that if we think of pullbacks in terms of market breadth, not in terms of price action alone, then during this whole rise up, we have seen many pullbacks where the majority of stocks in the S&P 500 universe have been trading below their 3-day moving averages. And those have been really good entry points on the way up. But we have to change how we think about pullbacks because some sectors are so strong that even though the majority of stocks come down below their 3-day moving averages, the overall averages don't pull back because of those strong, very strong sectors. And I can address
Right.
more of that if people are interested. But anyway, yeah,
So,
Will asked a question,
right.
developing divergence between the Dow and the Russell and the S&P. Yeah, clearly. Well, I'll match you and raise you, Will. Um, Divergence not only among markets and sectors, but if the oil problem really is going to be a big problem this year, then we'll see divergences among international stock markets because some countries are big oil importers and some are big oil exporters. And if oil prices go up, 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 then the exporters should do pretty well. They'll get more money for their oil supply, and the importers could be really hurt. So that would be reflected eventually in their markets, and that would be a sign that inflation and oil are real issues.
Tanner is asking about some thoughts on the reverse carry out of Japan.
Yeah, and I'm talking with people about other economies in Asia as well, and also Australia and New Zealand. A lot of the economies in that part of the world are very oil dependent. They're not producers. And so, who are they dependent on for their oil? A country called China, in part. And if supplies there dry up, then you could have real problems economically that would affect the currencies and would affect what's called the carry trade. Yes, that would be very serious.
Thank you so much, Brett. I don't know if there are any other questions with regard to what Brett was talking about. And I'm curious, how many of you as day traders, or how many of you are day traders and who is actually swing trading? And to what extent do you actually consider this kind of things in your trading strategy? Because I saw someone saying, I'm just looking, I'm just looking at the time frame, the technical, where to get in, and not so much at all these things that are going in the world. Because when you are a day trader, you're trading very short time frame. So I'm curious, how many of you actually consider those conditions and take that into your daily trading plan? I really only look at big news, day and swing trade. hard to remove my fear right now with macro. Yeah, so how about we will talk about fear, because I think that even if you look away from trading itself, the situation is creating a lot of fear, like what is going to happen next. And that is definitely bleeding into your trading decisions. And people are much more conscientious about their spendings, and that creates extra pressure when you are taking losses in trading. So this might really influence and impact your decisions in your plan. So, do you guys have any specific situation or question with regard to your trading that you would like to put out there so we can talk about that? Because one thing that is biggest fish Trump tweet, take each day as a new opportunity, up and downs. Yeah, if you really look at the Trump tweets, this is actually at this point something that's very predictable, right? We can almost assume that there will be unexpected news from something that is going to be tweeted. So while at the beginning it was definitely unexpected, now you can expect the unexpected. And with that, it's pretty much predictable, right? We just have to take it into account that this might happen.
Agnieszka, can I just address Will's question? What is your
Of
view of
course,
trading
absolutely.
more than one setup? And yeah, and for day traders, active traders, absolutely trading more than one setup, because there are more than one, there's more than one type of market. And so certain setups occur in certain kinds of markets. And the setups that you might use in a relatively flat market that's chopping around and then breaking out would be different from a setup you would use in a high VIX market that's, volatile and going down, for instance. So if you look at uh, places that train short-term traders like SMB, they always train people in more than one setup to adapt to different market conditions.
Well, is that something that you are wanting to do, or is it something that you are doing, and is it working for you? I'm always curious about what's behind the question.
Well, I think Dr. Brett's answer suggested what's behind the question, because there's different markets, different factors, different types of trades that are working. So I'm developing setups, Dr. Brett, for your information. I started taking Agnieszka's case class, which is amazing. And I did want to thank you for the class that you did a year ago, because it finally resonated with me when you talked about losses as data points and opportunities for growth. So I have that printed out, and I just wanted to celebrate that, because it finally hit with me. So I will be eternally grateful for that class and for your wisdom. So I appreciate that. I have a setup that is a day trade setup. It could turn into a swing. It involves a moving average, but there are also setups that I learned from Brian Shannon, with a pullback to the day two anchor VWAP and then a cross up over day one anchor VWAP, or something similar to that. So that has been a very profitable trade recently, buying that pullback either to that anchor VWAP or to a moving average. I see it all the time. So the intention and motivation behind the question is, I'm exploring the technical setups, and I'm also growing with the psychological component to trading. And that's the reason I wanted to get your take on that.
Oh, very good. Yeah, thank you very, very much, Will. I just want to do a shout out to Brian Shannon and his work with anchored VWAP. If any of the people on this call are not familiar, Brian Shannon posts quite a bit on X, Twitter, and he has written some really good things. including a book about anchored VWAP.
Right.
But it's very helpful in framing short-term ideas. Yeah, Kathy, Brian Shannon's amazing. Yeah, and he's a really good person, which is something that's important to me. There are some people who really puff themselves up and they try to get lots of attention and all that. And he is just the opposite. Yeah, just really good character.
I would like to go back to Jim. Jim, if you would like to come on the camera and ask your questions, because you are asking about jumping back into a trade. I usually, when I hear jumping back, the first thing that comes up with me is we never jump back into a trade, and I do pay a lot of attention to how we speak, because whatever you say to yourself, that's how you program yourself, and your inner narrative is going to make you do things. So if you are getting back into your trade, there is a strategy behind it, and that's something that we defined before we are in a trade, because otherwise, yes, it's an impulsive decision and we will be jumping back and in and out. So Jim, what's the question?
This would be a case of following all my rules, being out of the market, earlier this year, watching the market just trend down, more of a swing trader, and then watching the April, I think 8th, whatever the follow through days, the can slim metrics would show, and buying several new positions, but being hesitant to actually put on a significant trade. So I'm comfortable going, hey, look, the market's turning here. This is a great time to be in. And now I own 4 or 5 positions that just take off and go, and you might be up 50, 60, 70%, but it's such a small position, it doesn't really move the needle significantly in the account, right? And so I find myself doing this every time I end up on the sidelines. When the market takes off, I'm slow to get in. And then as I try to build that position, of course, by the time I get it built, the market pulls back. And so I'm just wondering how other people think about that, or how do you overcome that that jumps in once the market's in a downtrend? Because then that's when I start hearing all the things. Oil's going crazy, the wars in Iran, and all the things can fall apart. So I'll just sit here on my hands a while, and the market always turns in the worst possible spots, right? And so how do I get confident in getting back into the market with a position that's big enough to make a difference? That's really the point of the question.
Yeah, it's a great question. Thank you very much, Jim. I'll tell you what the traders I work with do, or many of them do, and I think I've written a little bit about this on the blog. What gets people into a trade, if they like an idea, let's say that they are really keen on this AI idea and we're seeing a technological revolution. And so they look at the leading performers and they've gone long a company like SanDisk. Has everyone seen?
I'm laughing.
SanDisk?
I'm laughing because this has been my cash cow this year. That's why I'm like, yeah, this is absolutely extraordinary.
It's extraordinary. That's true. But what they'll do is they'll put what's called a core position on in a stock like that. And that core position has a wide stop. In other words, it's not a huge position, and they're willing to sit with it, and they realize it could go against them. But then they have a different set of criteria for getting big in the trade. So an example would be if we saw a turn in that anchored VWAP that we were talking about with Brian Shannon. So we cross above the volume weighted average price, and that's our criterion for getting large in the trade. Now, should we pull back on that VWAP, go below it, we would take off that bigger piece. But it's not just going all in or going all out. It's finding places to get big, pull back, and manage risk if it goes against us, but ride that core position. So I had a portfolio manager I used to work with, a very successful manager, and he would put on his core position and he would say to me, I'm really hoping it goes down. I hope it goes against me, because that would help him get big in the trade. Once it went down further and then started to cross, he would go after it. So ironically, the loss on the core position was now defined as an opportunity for getting bigger.
So, Brett, when you say core position and then the other position, is it actually like one trade and it's being built, or is it a separate trade for the small position and
Yeah, I'm
then
glad you asked that.
another?
Yeah, very good question. Yeah, they do it for all their positions.
Okay.
Yeah, so
Okay.
each position will have a core, each position will have criteria for getting big. Yeah, so they do that pretty much across the board.
Okay. And they always keep the core position there unless they get stopped out.
Yeah,
Correct.
unless something really fundamental goes wrong, yeah, they'll hold on to that core position. Now realize that these are hedge fund people; they're not day traders. But I
Right.
think that it could be adapted. That mentality or that approach could be adapted to active day trading, and we could get into a trade with moderate size, but then figure out, okay, what would make me big in the trade? So let's say we're bouncing around in a range and we start to see a breakout above the range on high volume. That's where we get big. And we'll get out of that bigger piece if it goes back into that prior range. So,
Right.
so I think that way of trading could be adapted to more active day traders. Notice the bigger issue here, that how we structure our trading affects our psychology, affects our mindset. In other words, you're not trying to feel more positive because you lost money. No, you're figuring out, how can I manage positions better and how can I take more advantage of opportunity? And that gives me more of an opportunity mindset. Okay, now I'll STFU. That's not the name of a stock. That's not the symbol for a stock.
One thing that I come across with traders is that there is fear that's coming up when the price goes actually in the direction that you have been waiting for. That, and that's where the problem comes in, where traders cut their trades short. They have a winner and then they get out of the trade because they decide that it's too extended, or they start feeling discomfort of, I don't want to lose the profit. So I can imagine that if you are in a trade that's working and you don't have that strategy defined before of adding to a trade, when that fear of, this is going to turn around, I better take my profit, this is also going to stop you from actually adding to the winning trade, right? Because you first have to deal with that fear of, it's going to turn around, I'm going to lose my profit, before you can even start considering adding to your winner.
That's a great point. That's a great point. The fear really prevents us from getting big in the trade. Will, you're absolutely right. Tom Hogard does exactly that. Some of you may be familiar with Lance Brightstein. I think he's another one who's good at getting big on ideas that work out.
So how many of you actually deal with that fear of getting out of the trade too early? Because if you have that, then adding to a winning trade, that's like another level in the game. Okay, that's like level 2. First deal with the fear, number 1, right? And that's, that's a very legit fear. And there are some patterns behind it that you can look at and say, where does this fear come from? Because you can have a setup that you say, okay, I have to work for the target. But the moment that you start negotiating with yourself during the trade, you're going to talk yourself out of a winning trade. Yeah, so having the data is really good. Like if you can look at all your trades that you have done so far and actually prove it to yourself that the trade, even if you got out of those trades, if you can see how far your trade went and how many times it actually did go to your target, the data will always help you to convince your brain. Because at the moment that you are dealing with emotions, you don't have access to that information. It's like you're emotional and you are reactive. So it's always good to give yourself that evidence. I hate seeing green go red. Yeah. Holding winners is my strong suit. Cutting losses is my problem. I scale out with a stop. So I'm actually curious I think for the institutional traders, it's a little bit different because they're not trading their own money. And do you think that makes a difference for them to cut losses quicker or being more responsible for someone else's money?
Almost always they feel more pressure trading other people's money because they realize that responsibility. With their own money, they're often willing to be a little more flexible, but they don't feel free to do that with other people's money. So that is a performance issue that they face, a pressure that they face. One thing I'll just mention real quickly, and then I want to get to Simone's question about neurofeedback. The traders who will get big in a position, if it meets a criterion, they also have set points where they take profits. So they'll have a first take profit level pretty nearby. They take profit on a part of the position pretty quickly. And then another take profit level, and then another take profit level. And then the last piece, they might let it ride. But that's how they avoid a situation of it goes for you and then goes all the way against you. But they have a process, they have a structure for doing that that they can follow routinely that helps them hold on to their profits and not just reverse them. So just real quickly, I've written about neurofeedback in my most recent book. It's called Positive Trading Psychology. Neurofeedback is brainwave biofeedback. There are newer portable devices that you wear on your head, and they measure your brain waves in real time. And you can learn techniques to literally control your brain waves and not only be more calm and focused, but also improve your concentration, which is very, very helpful. And so Simone asks, have you seen it produce meaningful results compared to cognitive and behavioral training? It's a very good question. The way I would answer it, Simone, is that it makes it easier to get results from cognitive and behavioral training. So, for instance, cognitive techniques are techniques for challenging negative thought patterns and replacing them with more constructive thought patterns. Well, if you can control your brain waves and be more focused while you do that, that makes the cognitive work sink in better, so to speak. So I think they go hand in hand. But it's worth reading about brainwave biofeedback or neurofeedback and seeing what's out there. I use a unit called Muse, M-U-S-E, and you can look that up and see if that might be something that you would be interested in.
So when I work with traders, what we also use is we are using the brain frequencies and or teaching yourself how to regulate yourself through moving through different frequencies. So making sure that you are on a higher frequency in terms of your emotions, so that emotions that are vibrating on the lower frequencies like fear, greed, revenge, anger, frustration, all those emotions, they have no access to you, basically. So it's a little bit like tuning your brain waves to a radio station of the music that you want to be listening to, instead of the emotions that you don't want to feel. So that is also very effective, and I see it for my students having really positive results from doing that. Dr. Brent, there was a question about whether there are certain personality types that you have witnessed that tend to be more successful at trading, or anyone can do it. It's a very interesting question, almost personal question.
Yeah, yes. Well, actually, at several different hedge funds, I've done research with them on this very question. So I do have a response to that. I just want to get to Peter Robbins' question first, if I may, Agnieszka. He says, when you talk about different market environments, would there not be times when you would avoid taking big positions depending on your overall risk profile? Very good question. And I recommend Peter and his work for those of you who might be interested, check out his book. But yes, a great example, Peter, obviously, if we get a VIX that's approaching 20, a volatile market in equities where things are really swinging quite a bit, that changes how you think about quote unquote big positions. And depending on your risk profile, you're certainly not going to go big when a market is increasing in volatility. So it's a really, really good point. Okay, so your question again, Agnieszka.
Are there certain personality types that you have witnessed that tend to be more successful at trading, or can anyone do it?
Yeah, no, anyone can't do it. And that's true of any activity. Can anyone be a successful basketball player? Could anyone become a successful musician? Of course not. It takes certain talents as well as skills that are built upon those talents. But in the research I've done, what is the number one predictor of trading success? Now, granted, this is with professional trading populations, but what's the number one predictor? What would people guess? You can throw it in the chat. The number one predictor
for success in trading, you're saying?
For success in trading, yeah. Risk tolerant, background, grit. Yeah, grit. That's a good coachability. Discipline.
Patience.
Yes, yeah. Being competitive, being disciplined. So Stephen Hallman, yeah, curiosity, intellectual curiosity, that was the number one factor.
Wow.
Now, that's really interesting because the really good traders love finding opportunity. They love digging into markets and finding things that could work and discovering new ideas. And even when markets aren't moving very much, even when they're out of the market, because they have that curiosity, they're always involved. And so it's not just all about P&L. It's about learning. It's about developing ideas. That turned out to be number one. Other things that people mentioned, like discipline, it's called conscientiousness in the psychological research, and things like resilience. Yes, those ended up being very important. Also, a characteristic that is called entrepreneurialism. The really good traders, their trading is their business, and they have a lot of motivation and vision about growing their business. So they approach their trading as an entrepreneur approaches their developing business.
I love that. And the fact that it's curiosity on the first place, I think this is the fact that if you have curiosity, that is helping a lot with releasing pressure in trading.
Yeah.
Because if you take a loss and you are curious about it, instead of angry, fearful, instead of getting into being stressed about it, that's where you start getting the lessons that you need to make the next step, right? That curiosity, like, how come? How how did that happen? Where does this come from? And really digging into what happened, not why it happened, but what happened, how it happened. That's why even with your own behavior in trading, many people ask, why am I doing this? Right? And that's a lot of pressure already, just blaming yourself, like, why am I doing this again? I always say that's not the right question. Just ask yourself, how are you doing it? What kind of steps are you taking to repeat the same pattern, for example? Because that gives you a completely different approach. You can see what kind of strategies you are using in your behavior so that you can start changing it. And that's the curiosity, right? Because with curiosity, you are not blaming yourself. You become curious about your own behavior, and that makes things so much lighter. And when you feel light about it, it's much easier to actually look at that. Like, how many times I hear, like, I don't look at my stats. I don't want to look at that, right?
Mhm.
Like, I don't want to see my losses, or what am I doing wrong? And and that's the missing part. Like, we need to look at that. We need to be curious about that.
Absolutely. Vanessa, thank you very much for fielding questions. I appreciate your helping out.
Yes.
One of the questions that someone asked is, how long do you recommend putting restraints on size, time, basically overall trading when in a drawdown? So for how long do you size down when you're in a drawdown? It's hard to stay focused when you're sized down. What protocol do you recommend? Yes, at the hedge funds where I work, if people lose a certain amount, they're expected to get smaller. And they only start to grow their size when they are seeing things accurately, where they're seeing opportunity. But the whole idea is to be trading larger when you're trading well and you see things well. And when you're not seeing things well and you're losing money, you're quick to get smaller. The issue of staying focused when you're sized down, that's addressing the issue Agnieszka was just talking about in terms of the curiosity. That if you love finding opportunity in different places, then that's what keeps you focused, even when you're sized down.
Absolutely. Thank you so much for that, Brett. I see there is one question about how to learn about brain frequency. So if you're completely new to it, I think the great way to start would be, instead of just start studying neuroscience, which I'm absolutely fascinated about and crazy about. So if you have the curiosity, by all means. But I would say, if you really want to learn a little bit more about the frequency connected to your emotions, there's a great book. I can't remember the author, but the book is called How Emotions Are Made. And that will give you the kickstart to learn a little bit more about the connection between your emotions and your frequency, and how you can start managing that. So the book is How Emotions Are Made, and just look up the author. Let's see. Regarding curiosity, I'm constantly looking for patterns in the S&P from a chart perspective. However, I'm not sure if that is what you mean.
That could be an example. But let's say you're looking at chart patterns in the S&P, but on different time frames. And so now your idea becomes a really good idea when the time frames line up. When you see something on the shorter term chart, the medium term chart, the longer term chart, and it's lining up, that could be, excuse me, that could be one way of defining really good opportunity where you might think about getting bigger.
Right.
Couple of questions here. Do you recommend any specific relaxation techniques while in a short-term trade? Certainly learning how to control your breathing. And, that's something, a little bit about, Agnieszka. The idea of controlling our body as a way of controlling our mind. And so that can be very helpful while in a short-term trade. Now, if you had something like a biofeedback unit, you could actually see if your deepened, slowed down breathing is changing your heart rate or is changing your brain waves, which is pretty cool. So one person asks about something I had mentioned about positive and negative reinforcement at the recent SMB conference. And, the idea here with positive and negative reinforcement is that you want, something we talked about very early on today, you want to take away helpful lessons from losing trades. And that becomes the positive reinforcement. If looking at losing trades only becomes a negative reinforcement, if it only becomes a negative, then obviously that's going to contribute to frustration. But if we can look at our losing trades and say, okay, what did I do wrong? What could I have done better? How can I set that as a goal for tomorrow? Now, all of a sudden, we're in a constructive mindset. And that changes everything with mind frame.
And that kind of connects to the question that I saw about discipline. It's a very wide question, how to maintain discipline when external life pressures interfere with performance. And we could probably have a separate workshop on that. But just honing on to the discipline itself and pressure. The more pressure you put on yourself, the more difficult it is to stay disciplined. And most people have been taught and have achieved a lot of good things in life through discipline based on negative reinforcement, based on fear. If you don't do this, then this is going to happen. So this is how we have learned to perform. Now, in trading, that kind of discipline is working against you and causes you more pressure. So while you are trading, and the previous answer, Brett, you guys are asking, like, how do you release pressure, right? So you are sitting there in front of the computer trying to release pressure by doing all kinds of techniques. But then on the other hand, you are trying to discipline yourself with negative reinforcement, adding more pressure in. So you are working against yourself. You're like doing two things contradictory to each other. And that's why a lot of times you don't see the result. It's like, yeah, but I can't stay disciplined. Yes, because you keep pushing yourself more, adding more pressure. And then your discipline breaks and you shoot into survival mode. So then your brain is just starts reacting. Your access to decisions and choices and rational thinking basically shuts off, and you become more reactive, more impulsive, more emotional. So there is a balance between, first of all, learning the regulation techniques. How can you keep your body regulated when you are being constantly triggered from the market, but also learning a different way of approaching yourself from inside instead of beating yourself up when things go wrong. For example, all your negative self-talk, all the expectations that you have, all the should have, would have, and yes, and sometimes from your, like, if there is more pressure added from your personal life, and maybe you have a full-time job as well, and a lot of people I know, they're trading while they're working. Every time you add extra pressure, you are actually not setting yourself up for success because you are adding something that you should be removing. So that is something that is food for thought for yourself to really look at the environment and the setup that you have. I'm not talking about the computer setup, but how do you set yourself up as a trader to perform? And this is, this is for trading, but this is for every single type of performance-based sports or jobs, right? you got to set yourself up, not just the 20 minutes that you are in a trade, but overall. Like recently someone said, I didn't sleep well, but I cannot imagine that impacts my performance. I'm like, well, it does. I mean, your sleep is very important. And you might be thinking that you are okay, but your brain might be thinking completely something else. And that's where this kind of devices like Muse is coming really handy, because you can actually see what your brain is thinking. Like, am I ready to perform, or am I pushing myself because I'm used to pushing myself perform?
Very nice, Agnieszka. Really good points. Todd asks, does trading overlap with any other professions? Yes. Actually, we did some research about this also at one of the hedge funds. It turns out that particularly the active traders often, not always, but often have a background as successful video gamers. And the video games involve strategy, they involve risk and reward, and they involve active thinking. We found also that a number of successful traders were successful as chess players. I thought that was really interesting, because chess involves strategy, thinking ahead. Jim's going to start gaming. Okay, I don't want to be blamed for your divorce, Jim. Anyway, but chess involves strategy and thinking under pressure, and so it turns out that kind of strategic thinking was helpful in terms of trading.
Very good. Really great point. And it actually doesn't surprise me. I was having this conversation recently about, how day trading is very much like stepping into Formula One race straight away, instead of just like first driving a car, like, more long-term or swing trading, something slower, and then maybe moving on to the race car, right? But most day traders, they're just stepping right into Formula One cars. And in fact, those drivers are first practicing, that they're great gamers, right? They all first play the simulator before they actually can drive the car.
Right.
Very good. Yeah, we are almost at the hour. We have 4 minutes left. So guys, if you just last few questions. If you have anything else, this is your chance, because we have the sessions once a year. And I'm always absolutely thrilled that you, Brett, can find the time for us in your busy schedule, traveling in between all your commitments.
Well, thank you, Agnieszka. It's great working with you, and great fielding these questions. And I look forward to doing this again.
Yes, fantastic. I really appreciate you guys for being here, and just stay tuned, stay in my community, and I will do my utmost best to bring you the best of the best always. I praise always myself very fortunate to be able to work with people like yourself, Brett, and also with Peter Robbins, who is here. So guys, if you haven't had book from Peter, it's so funny that you and Brett have actually published the book very close to each other.
For the same publisher. Yeah, absolutely.
Yes, same publisher.
Yeah. So the book, in my case, is Positive Trading Psychology. So you can Google that. And as Agnieszka mentioned, there's an audio book, there's an electronic book, and a regular paper book. Yes, Positive Trading Psychology. And for the next time we do this, Agnieszka, hold on just a second here. I'll show you my girlfriend. This is my 1-year-old girlfriend. She just turned 1. And
Beautiful.
this is a chocolate point Siamese. Mwah. And her name is Nomi, Nomi. And she terrorizes my home. Anyway, so
Fantastic.
yeah, so for our next
That's what cats do.
that's what little ones do. Absolutely. But for our next one, maybe we could do it as a three-way presentation and involve Peter. I would love that.
Absolutely.
Get
Absolutely.
three different perspectives. I would love
Yes.
that.
Yes, we
If
could
Peter's up
absolutely
for
do
it.
that
Yeah.
if Peter would like to do that, of course.
I'd always
Peter,
be up, I'd always be up for that for sure, Brett and Agnieszka. It's great working with both of you, and tonight was a great session. So thanks for putting it together.
Fantastic.
Yeah.
Thank you, Peter. And Peter's book is The Trader's Journey, and it's also available on Amazon in all formats. So if you guys want to check it out, Peter Robbins and The Trader's Journey. All right.
Good. Well, thanks again, everyone. Thank you, Agnieszka. And best of luck with your trading. And yeah, I might tomorrow morning when I post on my blog, I might address some of the things, Agnieszka, that we've been talking about in today's session.
Fantastic.
So keep an eye out for that.
Thank you so much again, Brett, for joining. I really appreciate your time and sharing all the wisdom that you have, and always, being open to come and to do this for the community. So valuable. I'm deeply grateful.
The feeling is mutual. The feeling is mutual. Thank you very much, everyone. Have a really good evening, and I look forward to seeing you again, hopefully in the not too distant future.
We'll be planning on it. Thank you so much, and thank you, everyone. Have a great evening, everyone.